Good afternoon. We have the 1 p.m. candle. If you guys are part of the TCM fam, you're on Central. If you're not, then you're on Eastern. And this will be the 2 o'clock candle. And you can replace all my 1 p.m., 1 a.m. with 2 p.m., 2 a.m. Very simple. Time zone does not matter. It is a series of 3 sets of 2 exact times, a.m. and p.m. So what I'm looking at over here is we've had price dabbling in this range where we had a 5 a.m. candle take out this 5 a.m. high. Okay. And basically the start of this fair value gap represents the 5 a.m. high. And you can see that right as the 5 a.m. is closing, we got 15 minutes left. It blasts through that high and we get some retracement. And just for reference sake, this open over here, which was a 9 a.m. open, when this closed below it, we were seeing lower prices. Okay, you could see that right there. All right, this was an open that runs through this previous high with speed and velocity, doesn't retrace back down, which makes it an important open. This is going to show you that when we're looking at important opens and closes of these candles, I just want to show you that these are coded so that price can return to them later. And if we come all the way back over here, all the way back, amazing that this 9 a.m. candle decides to go all the way down here and tap this. And you can see that right there. Okay. So we get a nice retracement back to a 9 a.m. open that was a very specific and consequential open because it expanded through a high, thus creating higher prices. And we've seen price close through it as we showed right over here. So when we're looking at these candles and times, here we have this huge move down, and then we have this beginning back up where nothing closes below this open. This open gets ran, but we don't have any candles starting to close below it. Okay, the close of this candle happens to be the CE of this fair value gap of this light candle. Okay, 1 o'clock candles. Again, markers and reference points for the 4-hour time theory. What I would like to see is I would like to see price get up into this CE of this 1 a.m. fair value gap. Again, which is also the close of this candle. This open, as it was sensitive to price prior, it's possible that it could be sensitive again, but in the opposite direction. So as this held price, orders were being built below this open, and price delivers up higher. Sell orders become built over here. Okay, we have some confluence. And then we really see a dive in price. So we might have an initial rejection up here. So as I'm looking for price to deliver this candle with this 1 p.m. open, I would like to see us get to the CE of it. There's a lot of time in this candle. We talk about holiday hours. So we could just tap this fair value gap, and that could be all that's needed, as this is a 1 o'clock sensitive area. Okay, so when I say you have to use these candles and the PD arrays that are taught, there's confluence with PD arrays. Okay, if we look at this section of the 4 hour where we have this high, displacement lower, retrace back up into an order block, and then displace lower, this area could be used as and this fair value gap can be used as a breaker. So all we're doing is we're watching for sensitivity amongst these areas. If we get rejection type sensitivity, then we have to start looking at, well, where are the next 1 o'clock points of interest that price might go to? Okay. And we have another 1 a.m. fair value gap. Okay, so we have possibilities. We have a previous 1 a.m. high, okay, which lies in this fair value gap, so we can highlight that. And we have to see price show a willingness to move in the direction of one of these areas. And so I use the 5-minute chart to show price willingness and how price action is handling these areas. Okay, and right now we're getting a lot of, we ran this high. We'll just highlight that. We haven't really closed above the high that ran. Okay, a lot of wicking. Then we got this big down close candle that kind of closes below all these. Okay, and it closes below the candle that ran this high. So unless we CSD this candle, there's the possibility that the target could change to down here. And this is the previous, what is that, 1 a.m. high. Okay. And then we just got a couple of, just a flat area of price and a fair value gap sitting below it. With this, with a lot of these wicks. So I don't see price in too much of a hurry. This isn't that far up, and there's a lot of time. Again, just looking at how price action is, this 5-minute candle that runs down here, it's closed below the CE of this. Um, and so it looks like price isn't giving a strong push to move up. But this price action isn't the cleanest of price action. Okay, so I think we're gonna wait a little bit. This swept as high as well, and then we got this candle reacting. So again, if we start closing lower, I'm going to look at, does the opportunity lie up here, or does the opportunity lie down here? Right now, we're hunting these opportunities up here, and we have it marked out. Okay, we got a previous 1 a.m., 1 p.m. open, and the 1 a.m. CE fair value gap, which is above the high set by New York open high. And so when we're scanning the 4-hour chart, again, we're looking at candles that hold some sort of value. And when you look at price action, the candle has to hold value for a specific reason. And we talked about this. This low was set in. Price runs the low, gathering longs or distributing their shorts to make a retracement and an accumulation before moving lower. Okay, notice how this candle closes below. Notice how this candle is the same time frame as that candle. And this candle was important for holding price. And then we have the same time frame candle close below it. There's a reason why price is doing that. Let's take a look at this candle over here. So we have the low is 2744.75 and the high is 2745.75. So we have a one handle overlap that it opens at the low of this candle, creating the breakaway gap that closes below this open. a lot of these concepts that I'm using on the 4 hour is a combination of what I've learned from a couple mentors, ICT being one of them, and the currency merchant being another one. Probably the two main mentors that I've used to dissect price action, ranges, opening, closing of candles. Um, and so that's where I'm drawing this information from. I know I've been getting a lot of questions from people that seems like they need to do a little more studying. They might be a little newer to the charts and price action. Um, and that's okay because if you're really looking to be able to understand price action and learn why certain candles are doing what they're doing, it takes time. And I would say that probably a lot of successful people out there have put in thousands and thousands of hours of studying and developing a system that works for them and that they can follow a set of rules to, and that will keep them patient in the process of trading the markets. All right, so we took out this high, and now we have 1, 2, 3, 4, 5, 6. It's been 30 minutes since that high was put in. So we need to see something with this candle. This candle takes off and really starts giving some push upwards, or it starts down closing, and then we think about the lower expectation. And we'll just mark this as previous, was it 1 p.m. high? All right, so now we just ran the previous high. Let's see what kind of do we get displacement through, or are we rejecting and still not closing above this high? This is a weekly fair value gap, by the way. That was an important 9 a.m. open. And so you can kind of see the relationship of the 4 hour candles. We get a 5 a.m. that finishes above here, takes out the high of this 5 a.m. candle. 9 a.m. opens, runs the high. Okay, boom, 9 a.m. runs the high, changing the state of delivery. This is a 1 minute inverse fair value gap. Okay. And it comes all the way down to this important 9 a.m. open. I mean, if this isn't obvious that the market is coded to run the 4-hour candles solely based off of time deliveries, where this very specific candle is going to deliver to this very specific other 4-hour candle that has the same time code. I mean, I'm showing you all this stuff, and we're watching price live, and I'm giving you these points of interest, and I'm showing you the backstory of why they're important. It's not just any random candle where I'm like, oh, well, this is a 9 a.m. open. Look at it. There's a reason why these opens are important. And it's because those very specific candles have contributed to the delivery of price in a very specific way. Just like we showed the relationship of this open and then what this candle did. It's a signature in price like ICT talks about. And so when you understand these signatures, then you can start using all this stuff that the 4 hour is giving you. It's basically a time map of where price needs to go. And then you just wait to see the reactions in these areas. Like, I would love to see price deliver all the way up here. Could look where this previous 1 p.m. sits at though. It sits in a 5-minute order block. Look what happened after price came up into that order block, that inverse fair value gap. It displaced quickly. Could that happen? Of course it could. We could see price reject here and come all the way back down to here. Nothing is a 100% black and white. This is exactly what it's going to do every time. Again, you have to be able to read price action and understand what reversals look like, what continuations look like. When candles start closing certain ways, what is that signifying? And so that's the exact reason why half is coming off at this 1 p.m. open. Okay. It was a very important open sitting in this fair value gap. It could show importance today. Just like this 9 a.m. open showed importance. Look at how this one didn't touch it, and then this one touches it, and then that's what we get the reversal back up after this distribution. It waited to touch this open. This came so close, but didn't touch it. These are signatures in price, and it happens over and over and over again. I wish I could sit here every day and watch this happen. Okay, so we just tapped previous 1 p.m. open. Our initial partials have been taken. Okay, so we'll take that off. So now what I'm going to do is we're going to put, if this candle that closed above this candle, if a candle closes below it, that would signify weakness in my opinion. Okay, this is all pretty much balanced. So if we start closing below this candle, that's going to signify weakness, and price is going to want to go lower. So we tap it and look what we get. Most people would have no idea why we get an initial reaction off of that price point. They might think fair. They might think didn't touch the inverse fair value gap, order block maybe. Okay, but what it's reacting off of is this previous 1 p.m. open, which is all the way over here. We'll just blow this up a little bit. Boom. So you can use this for your notes. So now what I'd like to do is I'd like to do a sell stop in profit. And now